Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to all the Trade Day team. Steve Miley here on the call for Trade Day for the Bull versus Bear webinar on Monday, the 19th of May. Welcome, everyone. We're going to go through our usual run through here today. We'll take a look at the calendar, what we've had, what we've got coming up. We're going to take the slightly bigger outlook for the week, though. We do on Monday, we'll take our look at what I like to call the shape of the week, to give an idea of where the key potential trigger points are for volatility this week. But as ever, in the current climate and the current regime in the US, that volatility can come anytime with news via social media or elsewhere. So it's not necessarily just around data events. It's not necessarily around schedule events. So we'll take a look at all of that anyhow. We'll also take a look at the articles from the major news pertaining to all of that. And we'll also take a look at the trading calendars and also take a look at the charts and what's going on in the charts, where the potential market moving triggers going into today. So first of all, let's take a look. So the two articles we published on the macro front the weekend in here. And so my apologies, actually, we missed off an event from Friday. Which was the downgrading of the US debt, which is impacting this morning. But so we have this macro matters, which is the longer version, and the macro summary, the shorter version in here. We'll just go through the macro matters in here. So global stocks had a good week last week after the last weekend's, not this weekend, just on the previous weekend's US-China trade talks lifted hopes of a trade deal. Tariffs were revised back down lower and for a 90-day period, and whilst negotiations continue. So that was all positive. So markets start on a positive footing last week. And that continued with the US CPI data highlighting cooling inflation. And then going into this week, the main event is going to be the data calendar is fairly light. We're looking at the global flash PMI. So if I jump down to the trading calendar in here, we've got nothing really of note through the early part of the week from the US at all, really. And it's really focusing on the global flash PMI data out on Thursday. If we look through now on the US side, there's hardly anything in here of note. We've got a load of CPI data from global economies, but nothing really of significant note. And if we go to the actual trading you see today, no data of note at all in here, but we do have various Fed speakers in here, Bostic, Williams and Kashkari all on the wires. And we go for this week, and you go through, if I then just sort this by, where's my filter? If I just sort it by the US only in here, and you'll see how little we have of note going into this week on the US side. So we'll get there in a sec. Just wait with me. And then we'll just have the bigger data, and I hit apply. And you see there's hardly anything of note. And even if I go to filter, we go for second tier data as well. For the US, it's very, very, very light. So you've got, Fed speakers, and then weekly crude oil stock. It's not a big piece of data, more oil data. So there's nothing really of note. So it's the flash PMI out on Thursday. So really nothing of any kind of significant note coming out of the US today, apart from the Fed speakers. On the earnings side, we do have Home Depot tomorrow. That often can actually have an impact on the bigger market as a reflection of the US consumer. And so, that's going to be maybe a minor focus going into the week. And then, the big thing, though, was on Friday. So, sorry, this was neglected off the macro matters, my bad. We had the downgrade of Moody's downgrade. I didn't think it was going to be as big a deal, actually, than it's turned out to be. It's moved markets more than I thought it was, because the other ratings agencies had already previously downgraded American debt, but Moody's downgraded. It's seen a slight sell-off in US Treasury yields, so down in price, higher in yields, but it's really impacted into stocks, almost more than it has on bonds, which is, it should be. Obviously, it's a downgrading on debt on bonds, not on. But it's a negative vote against the US government, really, and the US economy. So there we go. Outside of that, Biden diagnosed with aggressive form of prostate cancer. not going to impact the markets. Donald Trump said he'll have a call with Vladimir Putin today to discuss an end to war in Ukraine. So there could be something comes out on that. It's more likely, I guess, given the time difference, to be in the US morning potentially. So we'll see what happens with that. We're going to see. We'll keep an eye out for that. Maybe something coming out of that today. But at the moment, nothing really moving on that Ukraine-Russia side of things. What else do we have for you today? So Treasury's down. We spoke about this. That's the headline in here on Bloomberg this morning. And Treasury sliding broad pullback from US assets. Sell America is back. Moody's pushes to year yield to 5%. Treasury yields rise. Stocks and the dollar fall after US downgrade. And if you look at the global markets on the overnights, Asian stocks also getting pulled down by US stocks lower. So 7/10 on the Nikkei, but the Hang Seng little change. European stocks in here this morning also down. With that, so even though you would anticipate sell the US, buy elsewhere, but it's a general negative for global risk assets. So all global stocks lower in here this morning. You can see in here as well. Just getting a quick refresh on this, but the S&P is down about 1%, and the Nasdaq down 1.5%, so significantly lower. And actually, if we go to, I'll actually quick run through the FedWatch tool in here, but still not expecting a rate cut. Definitely not in June, pretty much. Fairly unlikely. Looks 65% to be unchanged still by July, and we're now looking for likely more like the rate cut to come here in September, and then by the end of the year now. The chances are only 2 rate cuts by the end of the year is the most likely scenario. And if we look at yields, though, even though yields up, this is a 10-year yields up here, but I mean, only back up to where we were at the highest points last week, back where we were with that big sell-off we had after the Liberation Day tariffs, and I was real concerned about the bond market. But so yes, yields are higher, but I mean, not aggressive. The stock market sell-off looks to me to be a bit more aggressive than really the moving yields. But nevertheless, yields, though, we've been bearish on price anyway, so yields higher. Price is lower. We've been bearish anyway, and stayed bearish right the way across the yield curve anyway. But on stocks in here, we have had a pullback. Markets pretty much closed on their highs and looking fairly resilient going into this morning. But if we go and take a look now, even though we have sold off, it's not a massive negative. We go and look at the daily charts in here. Yes, it's down, but I mean, it's hardly a massive bearish sell. Even whilst we're just above that low swing low from last Thursday, things look okay. That's on the ES. Similar story, actually, the Nasdaq just undercut that Thursday low. So Nasdaq looks a little bit more vulnerable, in here. And that's probably because higher yields, remember, higher longer term interest rates. Growth stocks get hit more because the discount, their price off discount present value. So growth stocks get hit more in a higher yield environment, and technology stocks are obviously part of those growth stocks, and the Nasdaq getting hit more than elsewhere. So yeah, the Nasdaq has, if you go and look on the 30-minute, the Nasdaq has undercut this low here, so from last week. So that looks a little bit more worrisome. Potential like topping pattern going in on the Nasdaq, and as well, if I zoom out in here, this very accelerated trend line, if I just extend that up in here, you'll see we're breaking that trend line. But really, you'd want to see that more breaking on, it's only just flirting with that trend line now. And obviously it's in pre-market, i.e., yes, futures are open, but the cash market's not open yet. So let's see what we do on the cash market open. For me, I would be buying the dip. I think it's a buy the dip option in here. So I wouldn't be surprised if markets recoup some of the losses we've had today, because it is more of a bond market event. It's more like a knee-jerk reaction for me while US is closed. I think we'll see some buy the dip action. So I would be remaining bullish going into today, even though we are nudging down at support levels. So looking for a rebound from my perspective today. All right, guys, and that's it. So even though it's a Monday, we usually have a lot to talk about, not a huge amount. And even with that downgrade in here, market's looking, for me, the stock market's looking relatively resilient, even though they are probing at some support levels and potentially looking for a rebound. And it's going to be, I think, a fairly light week overall in here. It could be a fairly quiet week, unless we get some developments on trade, unless we get some developments on UK-Russia. Data-wise, we just went through, right? There's effectively nothing out the US. It's a real non-week. So, and then remember, next weekend, I'm correct in saying, is the Memorial Day holiday this time next week, I think. Is it the week after? Maybe it's the week after, actually. Let me double check on that. Oh no, it must be next week because then it's the end of the month. Yeah, so next week is both a US. Next Monday is both a US and UK holiday. So potentially, could be a bit of a consolidation, or if anything, I think maybe a slight grind higher week in here going into this week. But but we could be getting something. Who knows? With the regime we're under in the US, who knows what we might get. So let's wait and see. All right, guys, but definitely keep an eye on Fed speakers as well. That's going to be the main focus maybe for this week, and then the global flash PMI on Thursday. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and we'll be back with you with another Bull versus Bear webinar tomorrow.